Hi all, and welcome to another edition of our weekly market outlook report for the week starting Monday the 24th of August. We have a quieter week ahead of us, which starts with slow economic calendar on Monday. On Tuesday we should be on the lookout for Germany GDP and also US housing and consumers figures. Going forward, US durable goods data and crude oil inventories will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for US jobless claims and also preliminary GDP quarter 2 data. The week will finish on Friday with Eurozone consumer confidence and also US personal consumption expenditure and Michigan consumer sentiment figures. Now, let's take a look at few markets. This is euro dollar in 4-hourly time frame. Therefore, intraday we are seeing a nicely uptrending market supported by 200 period moving average, and this potentially looks like a consolidation which had a breakout, and now we are retesting that breakout level from above as a newly found support. So key trading level is at 1750, one spot 1750. Bulls are in control above that level, targeting an extension to the upside towards one spot 18, one spot 19, 1960, one spot 20 to the upside. Alternatively, if we see a dip lower and an end of day close below this sequence of the lows towards one spot 17, a retest of that level from underneath as a newly found resistance, then this rising support trend line here and also 200 period moving average, and we have a cluster of fibs there, could possibly open the way for a deeper corrective move towards 116, 115 to the downside, and therefore negate bullish outlook. Cable appears to be looking the same. Bullish traders are looking at the existence of this rising support trend line here. The key trading level is at 130. 80 at the moment. Either a rally from here and a breakout above these current resistances could open the way for an extension to the upside towards 133, 33.60, 134, 35 to the upside, therefore further dollar weakness. Alternatively, if we see a dip lower and a loss of 130, that would negate the bullish outlook, potentially opening the way for an extension to the downside and retest of additional support towards 129.47, 129, 128. Dollar Japanese yen is going sideways. Nothing new here. We had a fairly bearish pullback lower, and now we are seeing an oversold, a bounce back, and a reaction from overextended levels. This potentially could create a bear flag which could break to the downside, a further extending move to the 105, loss of 105, 104.70, 104.50, 104.30, 104, 103.75 could be tested to the downside. Alternatively, if we see a rally higher and a breakout above 106.40, that would negate this current a bearish scenario, potentially opening the way for an oversold bounce higher, therefore a short squeeze towards 107, 107.20, 107.80, 108 to the upside.